Good afternoon, everyone. Welcome and thank you for making time to join the Masterclass on Pricing for Profit webinar today. My name is Penny Corner and I'm the Executive Director here at the Master Plumbers Association of Queensland. And today I'll be hosting this webinar. Please be advised that we are recording this session today. Please feel free to submit any questions in the chat, and at the end, obviously, we'll be able to take some time to go through those. Today, we have some fantastic speakers presenting. We have John Mailer from Protrade United, the CEO, and Suzanne Faulkner, the CFO of Xact Accounting. John and Suzanne will cover three key areas today: mastering client conversations, learning the art of confidentially managing conversations with clients about raising your prices through practical tips and strategies, pricing strategically, diving into the ways your pricing strategy can build a strong brand, identity, and help you attract projects that align with your vision. We will have a Q&A session, so you can raise any questions that you'd like. All right, I'm now going to welcome Suzanne from Xact Accounting for her presentation. Thanks, Suzanne.
Thanks, Penny. Thanks for the warm welcome and welcome everyone to the webinar today. It's really an honour to be here sharing with Master Plumbers and all of you members in terms of some of the aspects that you're all facing at the moment, challenges in business and particularly around pricing. So what I'm covering off today is a couple of key areas. Firstly, we're going to have a quick look at where the current market sits and what are current economic drivers around the Australian market and in particular building and construction. And then we'll get into a little bit more around pricing and how we can do that in terms of what we do with our plumbing businesses. So interestingly, and not a surprise to most, I don't think, GDP growth at the moment is on a downward trend across Australia in terms of our economy. And that's been on that sort of trajectory from about 2020. You can see there's a big dip in just before 2019, and that was 2020 was COVID. We had a huge rebound off the back of that, and now we're heading back down the other direction. And so it's not unexpected. We all know that there's some recessionary pressures on at the moment, and interest rates are obviously rising to try and combat that. And not surprisingly, again, cost of living pressures are also going up. So our CPI index has been climbing over the last couple of years and quite steeply. You can see on that first graph there. And at the same time, our Australian cash rate as well has been increasing, currently sitting just over 4%. And we know that that's the Reserve Bank is looking at that almost monthly at the moment. And while it has sort of started to stabilise, it has had a huge increase over the last couple of years. Cost of living pressures combined with GDP growth also means that we're seeing household income and consumption dropping. People are getting quite cautious around what is happening in the market. People are reducing spending at the moment, which can impact on our businesses. And as a result, savings, we're dipping into that. So our ratio of savings to income is dropping, and obviously income in general terms is dropping a little bit as well. So people are cautious and spending has been contracting as a result of that. Interestingly, building approvals have also come back quite a bit. So you can see from August 2020, where it's sort of back about where those levels sat, which was that coming through the pandemic period there. It did spike again over that into 2021 period and coming back quite sharply now in terms of what we're seeing with building approvals. Not quite as bad as we were back in the 2008 crisis, as you can see back at the start of this graph, has sort of climbed steadily over the last, 10 years or so post that, but is coming back down to where we were around those pandemic levels as well. So not looking positive, but at the same time, there's certainly a lot happening around the place. The other thing I wanted to just highlight was building loan approvals as well. So the top line on this graph is showing your value of owner-occupied construction loans in Queensland. So that's the actual approval rates that have been coming through in relation to owner-occupied. And the second line on that graph is looking at the renovation approval rates and what's been happening in terms of loan for renovation purposes. And what we can see largely, and this is only over the last about 18 months, So we're going back to sort of early 2022 here. We've had an overall downward trend in owner-occupied approvals, building approvals, but it's sitting flat over the last 6 to 8 months. It's just been sort of a flat, holding steady kind of curve. And same with renovations. It has sort of come down a bit. You'll see, although that graph looks quite flat, the top there at 184,000 has come right back down to 90,000, and we're sort of only heading back up to about the 110, 120,000 mark. So that has actually dropped off quite a bit as well, and is obviously impacting where we're sitting in terms of that marketing, housing construction space. The other interesting thing I wanted to highlight before we get into the reasons why pricing can be quite important is our level of insolvencies. And the main one here, you'll see the blue on this graph is 2022 insolvency rates or numbers, and the orange is 2023. And you can see leading this charge is the construction industry, which is quite unfortunate, but we have been seeing more and more of that happening. You would have heard even just recently that Southeast Queensland with GJ Gardner and an offshoot of them, I think it was Harris Homes from memory, has just gone into insolvency as well. So there's certainly a fair bit of that around at the moment, but it doesn't mean that our businesses need to suffer. And for many that I'm seeing in the domestic market, particularly for plumbing, are actually still doing quite well. So we're not seeing the impact across some of those things that other industries might be seeing. Builders in particular are starting to see some of that slowdown, particularly with the limit or a reduction in construction loans being granted. But certainly for plumbing, we're still seeing some really positive results across the industry. And for many, seeing that businesses in that space are still going quite strong. So I wanted to link in now into pricing and what we're doing in that space. And so there is a charge out rates guide. If you don't have a copy of this, I have got a link coming up that you can click through to download that, or just drop a note in the chat and we can send a link through for you so you can download that from the Master Plumbers website. This guide I'm going to walk through in a moment has some really good tips and tools about what we should be doing in terms of pricing, how to set pricing, and what the key drivers are for your business in looking at how do I determine, am I charging the right rates or not? So as we come through all of that data that we've just seen in terms of economic conditions, etc., what does it look like for our businesses? What should we be focusing on right now when it comes to looking at, am I doing the right things for my business at this point in time? So despite what some people would say, leveling up marketing is a great way to start bringing in more business, making sure that your business is holding strong in the market and making sure your branding is on point. You're out there being in front of your customers, essentially, as much as you possibly can, looking at social media options as well, and really getting some marketing up and running to keep your name high in the list of plumbers around the place. Laser sharp pricing, and that's what we'll be focusing on very soon. Robust payment terms and processes, and I'll talk a little bit more about that in a minute. But basically, you need to really be focusing on how you are pricing, first of all, which we'll talk about, and how we're collecting and invoicing and what our payment terms look like. Are we still working on invoice plus 14 days or 30 days? Or are we looking at options where we can get payment on site at the time of the service being delivered? So there's some good things that we can do in that space as well. Look at our processes around collection. And then finally, know that there probably are leaner times coming, but it's only for a time and there will be another upcycle coming. So of all the graphs that we looked at just before, we will have noticed none of them are flat. They all do this. We're hoping that over time they start to waver upwards rather than to sit flat or head downwards. But it will come. There will be a turn in the cycle. As we sort of sometimes say, it's only a question of how long and how wide a trough is going to be, but we'll always come out the other side eventually. So let's have a quick look at what we need to do in terms of pricing. So first things first, GP should be around 40 to 50%. When we say GP, we're talking about gross profit there. So we're looking at our sales less our cost of goods sold. So looking at the direct costs that go into that, our labour costs, materials costs, vehicle costs, if we're doing call outs and those sorts of things as well, should all be factored into our cost of goods. So if we look at our revenue minus cost of goods, we should be generating around about a 40 to 50% return for gross profit. Our overheads, if we can, should be coming down under 10%. Now, at the moment, overheads are just escalating. We're seeing so much of where businesses, and particularly the influences of the market right now, overheads are climbing, and that's something we need to be mindful of. So if you can have your overheads under 15%, you're probably doing quite well in the current market environments, but getting them as close to 10 as you can is really ideal for maximising your profit and return on your investment for the business. Consider fixed pricing, and we'll talk a little bit more about that as I go through the presentation. But if it's not something you've thought about before, it might be worth something to consider as you go through whether or not your business could sustain a fixed pricing model, or even some of your services could be fixed price. And then looking at, as I mentioned before, strengthening your payment processes. So looking at what are your collection terms? How are you collecting your money from customers? Are your customers paying on time? As economic conditions worsen, which we hope they don't, but if they do, we will notice that clients are starting to pay later and later than normal. Where we were seeing 30-day payment terms in the past, we might now be seeing that stretch to 45 or even 60. And that's absolutely going to have a direct impact on your cash flow and profitability of running your business. So trying to strengthen those processes is a really key way to drive that revenue back into the business and hopefully profits at the same time. So what are some of our pricing fundamentals? First things first, and I'll give you an example shortly, we'll have a look at markup versus margin. This is something a lot of business owners do mix up. It is accounting terminology, but there are some different ways of looking at this. So we'll look at what that actually means. Regional pricing considerations as well. Some of you on this webinar today may be from regional areas rather than city-based, and that is going to impact pricing significantly. Traditionally, we can't charge necessarily as much in some regional areas as we do in some of the city-based areas, and vice versa. I've seen the same in operation for certain services as well. So you need to think about, if you're in a regional area, what that means and what pricing means in that space. And looking at retaining some competitiveness as well in the market and making sure that we are not just pricing for what we think we should be pricing, but how competitive is our pricing when we're looking at others in our same industry and our region. So let's have a quick look at margin versus markup. Now, the main difference here is just the way that things are calculated. So if you're talking about your markup, that is how much you're adding to the sales price of your goods. So as opposed to margin, which is looking at how much are you actually increasing your prices by to generate your gross profit or the margin on that sale. So a quick example, if you've got an item that costs $100, so you're paying $100 to buy, I don't know, some piping. If we add a 50% markup to that $100, that means that we will now sell that for $150. So we're working out 50% on the 100 to generate our $150 sales price. So that's our markup, where we take our cost and we just add a markup to that, or a percentage increase to determine what our sale price is. The second example there, same thing again, $100 for a bunch of piping. We're going to add 100% to that. So our sale price is going to end up being $200. So that's our markup, where we just take our cost and add that percentage on top. Our margin in comparison to that is, if we look at our item costing us $100 and we've marked it up 50%, so we're selling it for $150, that gives us a $50 margin, which is absolutely very similar to what we've seen already, but that only equates to a 33.3% margin. So our markup was 50% on that $100 item, but our margin comes in at 33.3%. Our second example here, where we had our $200 sale price as a 100% markup, is generating only a 50% margin. So you can see the difference there. And sometimes that interchangeably gets used, but it's actually incorrect to say 50% margin and 50% markup is the same. They're actually not the same. So that's relevant as we get into the pricing guide, which I'll talk about shortly. So some things around fixed pricing, and there has been a lot sort of floated over the years about, should we be looking at fixed pricing? How would that work in a plumbing business? What does that even mean? There are some considerations around whether it might work for you or not. One of the things that we've been looking at recently is it more efficient in the sales process? So does it speed things up? If you're producing a quote for a client Are you having to work through every item that you're then providing in that service to work out what your markup is on those goods, to work out your sales pricing and produce the quote? Or if you considered it as fixed price, does that mean you can suddenly just produce a quote within, say, 5 minutes as opposed to 20 minutes that it's taking at the moment? So does it speed up your sales process? Does it make it more efficient? Is it then shorter from quoting to cash as well? So if you know that your quote is going to be X because it's fixed price, it might be $150, that's it. Is it going to then shorten the time frame between you going to quote to you generating cash on that sale? That's a possibility in terms of how that might operate as well. And the opportunity then to lock in strong margins. If you know what your prices are going to be and you know roughly what it's going to cost you to produce that service or what it is that you're generating and heading out to do, you could potentially be locking in some very strong margins in relation to that, because you know the cost and the sale is going to be the same regardless. So there are some good things to consider when you're looking at potentially fixed pricing. Now, in terms of pricing fundamentals, we mentioned before regional pricing considerations. One of the things to note in that space is inflation seems to run a little bit higher in regional areas than it does sometimes in the city areas. We've noticed that year on year, particularly in Brisbane versus some of regional Queensland, Brisbane's inflationary rate seems to run a little bit lower than regional. And in that case, what we're looking at with pricing is if your inflationary rates are running higher in regional areas, in theory, it means you can probably boost your pricing a little bit higher as well. Now, it's all well and good to say, but how do we do that in reality? Customers don't always appreciate us for hiking our prices up, and we'll get to some ways that we can do that in a moment. And the other thing is to maintain some competitiveness. So looking at what are others in my area charging? How do I calculate what I'm doing with pricing, and how do I know that what I'm charging is reasonable for where I'm headed or the customer that I'm about to see or the service I'm performing? So we need to make sure that we're being competitive in that space. And in being competitive, sometimes it means shopping around, having a look at what are my competitors actually charging, and am I in line with that? You might find your competitors are charging 30% or 50% more than what you are. And so that means you could potentially already automatically raise your pricing by that 30 to 50%. So having a good idea of what's going on in the market in where your region or your area is a really good way to determine if you are on track in terms of competitive pricing or you're undercharging perhaps. So let's get in and have a quick look at the price guide. So as I said before, I've got a link coming up where you can download this. It is on the Master Plumbers website, so jump on there and have a look. You can download it whenever you're ready. There's an example in the price guide that talks about how we can look at charging. And this is one approach to potentially looking at how do we price something. This example here is looking at calculating an hourly charge rate. And what we're working through here is based on the hours available for you to do the job over the course of a year, how many hours you've got in terms of generating work. So if we're looking at 52 weeks of a year and working 5 days a week, that gives us a total of 260 days to work with. That equates, if we say 40 hours a week, to 6.5-hour days. Now, noting that we do want to take holidays. Sometimes it's not always practical, but we want to make sure they're in there, allowing us to take holidays. Public holidays need to be factored in, RDO, sick days, training days, etc., bad weather as well, and even some quiet trading days. So once we factor all those in, we actually can end up losing quite a few days. And in this example, if we factor those as they are stated, we end up losing 67 days a year. That means that our total days of work ends up not being 260, but in fact 193. And what we're looking at there is if we've got 6.5 hours per day and chargeable days of 193, we actually can only charge 1,255 hours per year in terms of generating revenue. So what does that equate to if we're looking at wages? So if we said a tradesperson wage sat at around just under 90,000, we need to add our super in there, which is at 11%, and some work cover charges. Now that might differ depending on what designation you are for work cover. That might come up or it might be a little lower. So the sum of all our employee costs could be close to 100,000. If we're looking at our cost per hour, we then have to divide our 100,000, call it, by the available hours that we've actually got, which is our 1255 hours. And that brings us back to a charge rate of about $78 per hour, or sorry, a cost rate of $78 per hour. If we said we want to achieve a margin of 50% on that employee, remembering margin and markup are different, we would then have to be charging that tradesperson out at $157 per hour. So looking at cost versus our charge out rate of 157 will generate us a margin of 50%. So it's a very simple example in terms of just working through that narrative of how many holiday days do we need to allow and how much time do we actually have with someone on site producing work. When working through that calculator, if you are the owner of the business and you need to provide time for costing, quoting, any of that sort of administrative sort of work, we'd need to factor in additional days where you need for that time to happen, or hours. And that might mean that your actual charge rate for that sort of work for you being out on the tools is going to be much higher than if you've got a tradesperson out 100% of the time. So keeping those things in mind in terms of working out our hourly rates. And the other one we've got in our example with the pricing calculator is our material markup. So if we're looking at, again, that's what we were talking about before, markup versus margin. Our material markup, if we want to say a 5% material charge is there, so we factor in sort of a wastage charge, 5% amount of that. Our desired profit margin's 15%, and we look at what our overheads are to factor into that as well. It means that we don't necessarily just mark up our materials on the basis of 20% or 30% or something like that. We might need to factor in a bit more. So what's our desired profit margin? Factor in an element of overheads as well, and wastage. Might mean that your margin or desired margin could be up as high as 45%. And remembering markup and margin were different. So a margin of 45% actually means a markup of nearly 82%. So for an item that's cost us $150, we might actually need to sell that at nearly $275. So just keeping in mind that some of those things will generate different results and profits particularly. And so work through the calculator carefully when you're working out what your margin needs to be, or, as I said before, keeping in mind the difference between markup and margin. If you want to generate 45% margin, you need to be marking up at 82%. There's a link to the pricing calculator. I'll give you guys a couple of minutes if you want to click on that to download. But as I said before, you can jump straight to the Master Plumbers website to download that as well. And I'm going to move through quickly on a couple of other points in here. The first being some other supporting material that is available for you. So as I said, there's the pricing guide. I believe that QR code should jump you straight through to those things as well. There's a pricing guide there which has that calculator we've just walked through and attached. There's also some other materials available on the Master Plumbers website. There's a templated letter there that you can use to send or to draft for clients to let them know you're increasing fees. The wording in there, obviously you can adapt and change as you need, but it's a good template in terms of just giving you that guidance as to how you might approach that type of thing if you want to needing to advise clients of a price increase coming through. A couple of other things. If you do get a bit of pushback from a customer as well, we do have available on Master Plumbers website, again, the 7 signs of a difficult customer. So if you are having some pushback and working through some issues and trying to figure out what's my next step in this conversation, this guide could be a really good one for you as well to have a look at. And finally, if you are looking to have a bit of a chat with someone to get your markups right, your margins right, look at your pricing overall, you're welcome to get in touch with us, and that QR code will take you to a fill-in form on our website that you can just jump in and have a consult with me or one of our other team members and just give you a bit of guidance on any of those sorts of things if you need them. So thank you guys for your time today. I really appreciate the opportunity, Penny, to come and have a chat with some of your members around some of those things. And I believe we're having questions at the end, so I'll pass back to Penny now.
Great. Thank you so much, Suzanne, for your informative presentation. It's great to hear about the current market and also the practical tips on how to interpret the charge out rate guide and obviously the calculator as well. And just, I suppose, explaining the difference between markup and margins, as it can be quite confusing for some. All right, I'm now going to hand over to John Mailer, the CEO from Protrade, to give us his presentation. Thank you so much, John.
Beautiful, Penny. Thank you for that. Just checking you can hear me clearly.
Yes, we can.
Beautiful. All right, let me bring my presentation up. Here we go. And I better just double check you can see that as well. You've got that there, guys?
Yes, we can
Beautiful.
see it.
All
Perfect.
right.
Thanks, John.
Thanks, Penny. Thanks, Suzanne. Listen, I love listening to you talk, Suzanne. Someone loves to make those economic data numbers sexy and relatable, which is terrific. And, I feel that what we're going to chat about today in my session here is very much aligned and also parallel to what Suzanne talked about today. Just a quick snapshot of how our relationship with Master Plumbers sort of ties in together. We work with about 200 businesses across Australia and New Zealand now in the coaching and mentoring space for the trade and construction industry. And tied in with today, we're really looking at how you can stabilize and streamline your business through consistency of income, profit, and cash. How you can scale if that's what you want to do and do that profitably, or you may be at the stage in your journey where you'd love to step out and have other people take on some senior roles in the business, or maybe let go of the business altogether. And that's how we love to work with our clients as well. So it's interesting when we come to pricing. I'm going to trust that some of you on this call love a burger. And we have here 3 different burgers from 3 different organizations. Now, the good old Big Mac that's been around economically around the world for 60 years or more now is there. We have a burger in the middle called the Ferg Burger. And if any of you have been to Queenstown in New Zealand, you may be familiar with the destination venue called the Ferg Burger, and that's one of their burgers. And then we have a burger on the right-hand side here, which comes from a restaurant in Paris and designed and looks very tasty and enjoyable at the same time. But it's interesting when we have a look at the pricing of all of these. It's going to fill a hole in our stomach, yeah? So our Big Mac sort of slots in, and I'm not a Macca's goer, so I'm guesstimating it's around about that $5 mark, depending on whether it's packaged up with another opportunity. We're at $5. If you go to the Ferg Burger in Queenstown, you'll pay about $25 and probably wait, depending on the time of the day, for about 45 minutes for the opportunity to do that as well. Or we can go to our famous restaurant in Paris and we can pick up this burger here and you'll pay $5,000. It does come with a bottle of Petrus Chablis and beautifully laid out truffles and also some caviar with it as well. However, when it comes to pricing, what we also want to understand is that some people are quite happy with a $5 Big Mac. Some people are happy to invest and pay a bit more for a $25 Ferg Burger. And there are some people who will pay $5,000 for a burger. Now, you might ask the question, who would pay $5,000 for a burger? Well, someone who can pay $5,000 for a burger. So when we lead contextually into our conversation today around pricing, what we like to do is work with our clients and get them to the stage where they are offering a premium experience and charging premium prices. And again, depending on the sector that you're in, whether it's commercial, residential, industrial, whether you're service and maintenance or you're project and construction based, there's different sliding scales in that top right-hand box there. But I'm going to challenge you today around your pricing that this is where you get the best margins, the best personal satisfaction as a business, the best profits, which then allows you to create and choose a business that serves you versus you serving the business. And that's what I'll be conversing with you from today. So if you're up for that, fantastic, and we're going to get going. So before we do look at some pricing, what I'd love you to do in considerations is to have a look at what we see as the biggest mistakes that business owners are making in their pricing model. And I've invested the last 90 to 120 days in our business working with clients and going behind the scenes of what's happening in their financials. And this may tie in beautifully with some of the things that we see Suzanne mentioning as well. And these are the biggest mistakes in no particular order. Number one is their pricing for markup and not gross profit margin. And understanding the difference is absolutely critical. Not knowing the true cost to employ, and that beautiful tool that Suzanne worked through is there to get some accurate data around that for you. Their pricing is based on the average of others. And what I mean by that is people are a little bit unsure because they don't know their numbers. So they'll ring around to a couple of other players in their industry. They'll find out what everybody else is doing and think, well, I won't be the most expensive. I won't be the lowest. I'll sit amongst the average. And when you sit amongst the average, you tend to show up and be average. And that's not what I expect of you guys. Being part of a great organization like this, you want to be and show up to be the best version of yourself in your business each and every day. Yeah. They're not back costing. And back costing is where you actually go back to the jobs and see what it actually cost you based on what you priced the job at as well, and how close is that comparison. And that pricing is based on time versus outcome or problem solved. And I'll give you a quick little story here. The plumbing contractor got called out to a large factory where one of the machines had broken down, and the machine was actually not operating, and it was costing a business tens of thousands of dollars a day. And so the plumbing contractor got called out. The CEO said, hey, listen, this is costing us a truckload. Can you go out there and identify what the challenge is and get it fixed as quickly as possible? So he walked around for probably half an hour, 45 minutes. He identified where the challenge was, put a big cross on the pipe, brought in his team. They fixed the pipe. The machines got back up operating within a couple of hours. So then the contractor sent the invoice to the organization. The CEO opened up the invoice and couldn't believe that it was $5,000. So he rang up the contractor and said, listen, I just want to check on this invoice that you sent me for $5,000. Would you mind itemizing it for me? And he said, absolutely. So he itemized the invoice, sent it back, and it basically said fixing the pipe, $500. Knowing which pipe to fix, $4,500. See, what I want you to share with you is a lot of the time you're undervaluing yourself because you are pricing based on time versus the problem you are solving and the expertise that you are offering. And something to consider is there is always someone willing to do it cheaper. So please don't let that be you. Now, I've got a picture here of some sheep, and some of you may know I used to be a shearer many years ago in a previous chapter of my life, and I know a lot about sheep. And one of the things we know about sheep is that sheep are easy to move. You've just got to, if you're in a paddock, you put the dogs around the back, you get a couple of them starting to move in one direction, the rest of them go, all right, let's just follow what everybody else is doing. And that is one of the biggest challenges that we face in our world today. And when we come to the trade and construction industry, there are a lot of sheep. And, you know, we laugh about how sheep move around. But really, is there much difference between sheep and people? I like to call them the sheeple. Because if someone's doing a silly thing, or a lot of people are doing a silly thing, well, then it must be okay, correct? So you can have 1,000 people doing a silly thing. It doesn't make it less sillier. So my support for you is to not be one of the sheep. And when people zig, you zag and look at ways to stand out and be a little different to the majority. So we get to choose our business by design or by default. And today it's all about design. And in the age of information, ignorance is a choice. When you get access to the numbers and the figures in your business in an accurate and timely manner, you will make better choices. And that's really the gig from here. So what can get in the way of you pricing effectively is, number one, fear of losing work. What if I don't win the work? What if I put my prices up and other people start sort of, pulling me down, the tall poppy syndrome? What about if I stand out? And you allowed the fear to guide you versus responding to it. Hey, we're all scared at times in our businesses. We've all got decisions to make and choices that we need to, select. But we can either let that fear guide us or we can respond to it. And secondly, a lot of that fear comes from our beliefs. And our beliefs is, I'm not worthy of charging that much. When Suzanne mentioned that, $157 an hour plus GST is where you need to start at, how many people go, oh my goodness, really? That much? Who am I to actually earn that much, make some good cash flow and be wealthy and free? I wouldn't pay that much to, fix what I'm going to be doing. So why would someone else pay that? I'm no good with numbers, or, what if it's not profitable? Let's just keep working harder. I'm going to suggest that most of those blocks are the things that get in the way of people pricing where they could be pricing and getting the real benefits from their business. So here's some 5 simple steps that I want to run through. And again, you're going to get a recording of this, so a good chance to review it at another time, or maybe share it with some of your team players to help you implement some of these scenarios. So you've got to get really clear on what your business costs to run. I'm going to suggest that 80% of you, maybe not 80% who are on the call because you're here for a reason, but there's 80% of plus of business owners in the trade and construction industry who are clueless around the actual cost to run their business. They're not getting accurate or current reporting. Their bookkeeping is all over the place. There's no line items to separate cost of goods, keeping, your employee costs separate based on who's on the tools and who's not, knowing the accurate cost to employee, knowing what all your operating expenses are. People are becoming lazy in, receiving materials and checking in. Do you charge for specialist equipment? When you go out to a job, what is the cost to use your specialist equipment? And you're allocating downtime and overtime, all of these aspects. I understand, learning the numbers in your business is like learning a foreign language. I never used to be great at business when it comes to numbers. I was great at doing what I did, but the numbers, I used to put my head in the sand until I got myself in a position where I could not ignore it anymore. So number 1, get clear on your costs. Number 2, set some profit targets. So if you, rather than be revenue focused, be profit focused. And you want to create a culture of profit within your business. You want to have a profit oriented culture. So you want to have some targets around this. I'll go you a quick example in a minute, but you want to work backwards from your pre-tax profit. Add your operating expenses, calculate your GP or gross profit, and then work the margin required in your pricing and price for your gross profit return, not just the income at the top level. And here's an example. Let's have a look at this. This company here is looking for a $150,000 pre-tax profit after paying themselves a salary as a business owner. They know historically that their business, needs about $300,000 a year to run the operating expenses. You add those two together, and this business is required to generate $450,000 in gross profit for the year. They've got a profit target straight away. Now, historically, and this is making it really simple, their GP is at 45%. Their cost of goods are around $550,000. Therefore, their sales income required on that profit target is $1 million. I trust that makes sense, but I'm going to challenge you to go out there and do that in your business as well. If you haven't worked backwards from the profit you want to generate and just focusing from the top down, you may be really busy in the next 12 months and have nothing to show for it. Andrew is one of our clients from 100% Plumbing, is a great advocate on a profit-focused culture. And he educated his team on all of the costs required to run the business. And when he had 7 vans on the road and he actually shared the numbers with his team, they were gobsmacked of what it actually did cost to run the business. And so in the absence of explicit information, people can make stuff up. And I'm sure as a business owner, you may have people on your team who think you are rolling in it, loaded, and to waste $1 here or there is not going to matter. It's different. Number 3, I'm going to suggest you price yourself to be in the top 10%. Now, here's a question for you. If it was in person and we had an open audience here, 20 people, all in the same industry, all dealing with the same sector, the question I have for you, who's going to be the most expensive? Who in here wants to be the most expensive? Often I usually get one person sort of like put their hand up like this. Oh, I'll be the most. Versus saying, that's going to be me. And this is the reason why. And people are going to want to pay that as well. So if you ever want to invest in a great little book for now, Andrew Griffiths has written a book called Someone Has to Be the Most Expensive. Why not make it you? Now, there's a lot of ins and outs of how to position yourself, but your pricing is part of your positioning. Someone has to be the most expensive. Why not make it you? And then when people say they are expensive and they're the best, that's the backup line I'm going to challenge you to be. Now, some of you are really scared, are fearful of putting yourself in that category because then you might have to back it up. You might have to put in procedures and processes and do training and make sure that your team show up on time and are professional and polite and clean up after themselves. But if you can do all of that, why not be the most expensive and deliver the value? You know, some of you on this call don't mind paying top dollar for whatever it is that you choose, because you know you get the value and you're getting the best. Apply that to your business. Yeah. Number 4, communicating value versus price. Now, I love what Suzanne said before around letters on how to communicate price rises. But here's what I want you to know. You guys don't like to buy cheap, and your customers don't want to buy cheap. If they do, then they're not the right customer for you. There are always someone, as we know, who is prepared to do it cheaper. Let them do it, and then have you take the phone call from the customer who says, you know what, we had Bob out to do what he did, but it was no good. I need you to come back. And you fix up their mess and do it properly. They don't want cheap, they want value. So you've got to be able to communicate the outcome and the problem solved versus the time that it will take. If you've got people quibbling over time, okay, they're not the right customer for you. You want people who want the problem solved and want to invest in it done quickly, professionally, and promptly. And you want to be committed to the outcome, not attached to the customer. What I see is what gets in the way. People become fearful because they're attached to whether they win the work or not. You are committed to a profitable, professional business that delivers everything that the customer expects, maybe a little bit more. Whether people choose you or not, let go of that. Okay? Don't become desperate. Come from a place of inspiration. John, who's some of you know well exceptionally well, has been working with us at Protrade United now for many years, and we've done a lot of work, and he's done a lot of work on himself about how to communicate that value to the customer, how to let go of those customers who are going to quibble about price over the phone. And you know, John will be very clear in saying if he can do it and progress and move through that, you can as well. And this can be really simple. And one of the things I want you to consider here, this is a business we started working with. When they came to us, they had 4 on the tools. Over the last 12 months, they'd made $1,670 in net profit, and they had not increased their prices for over 12 months. What we recognised, they were undercharging, particularly for the labour component of their business, by 30%. So when Suzanne showed you those numbers before, that's exactly what showed up. So they increased their labour component charge out by 30%. And over the next 12 months, they made $190,000 pre-tax profit based on the 4 techs. Okay, it was as simple as doing that. Simple, not easy. So we worked through them and put the structures in place. If they can do it, you can do it as well. We have a pricing for profit checklist as part of our tools and resources for clients. And if you're after one of those, we can give you the link at the very end of this to get for that. And we have a 19-point checklist to help you run through to make sure you are pricing effectively in your business. And the last but not least, very important to review your pricing quarterly. Back cost every job. Treat it like a game. What did you want? What did you get? Monitor your operating expenses and efficiencies. Labor inefficiencies or poor labor productivity leaks your business of profit. You've got to allow for that in your pricing as well. And have a third party, someone who's not emotionally attached to your business, to review your pricing and challenge your assumptions and challenge the way that you've always been doing something as well. And now that you are going to be one of the most expensive, it's being able to look at all of your touch points where you connect in some way with your customer and look for ways to make that experience as distinctive and as memorable as you possibly can. Last little thing to consider is most businesses do not follow up. One of the things I can promise you based on the work that I've been doing with businesses now over the last 20 years is that when business owners have a process and a structure in place to follow up on inquiries, prices, proposals, quotes, whatever language you want to give it, their margins and their income skyrocket. Businesses have become sales lazy over the last 3 to 4 years when there has been an abundance of workflow. Even the cowboys have made a little bit of money along the way. And people have become sales lazy. They've become order takers. Right now is the opportunity to jump back and have a structure in place. And I call it the low-hanging fruit. How do I ring up to help the people who inquired about business with us? Well, I put a price in 3 weeks, 3 months, 6 months ago. and support them. I say to people we start working with, if you want to ensure that your future pipeline is full, yes, you need a structure for marketing, but you also have a great structure in place to follow up as well. So that's a little bit about how we work with our clients on to help them with their pricing. Not only is it the content, but it's all the context and the person behind as well. And we put together a pretty bulletproof structure now on how to give business owners the very next best steps that they can take in their journey with Protrade United. And what we'd love to do is give you the opportunity to have a sit down with one of our team. We'll have a URL as well as this QR code. And if you would like a copy of that pricing for profit checklist, we're happy to send that out and also give you the opportunity to sit down with one of our team and have a look at where you are situated now in your journey, what could possibly get in the way, and then support you with some specific trade and construction recommendations to move you forward from here on end. So I'm just going to stop my sharing there.
That's great. Thank you so much, John, for that educational presentation. It's so great to hear about the key areas to be focusing on, get clear on your costs, setting your profit targets, price to be in the top 10%, communicate that value versus price. And I think that comes up quite a lot in talking to members, and also that review quarterly and follow up as well. So thank you so much for that. We've got about 10 minutes now for question time. We do have one that's come through on the chat, but if anyone would like to put something through, feel free, or otherwise we can go to you and you can ask your question direct. A question that Jason was asking on behalf of a member who was unable to join today. He says, from a regional perspective, if you have to travel for a special project, i.e. 5 hours each way, how is it best to calculate a vehicle kilometre rate to cover costs? The member uses the ATO rate currently. I don't know if you have any comment on that, maybe Suzanne?
Yeah, it's a good question, and one we get quite frequently, actually. A lot of people rely on the ATO rate, and there's nothing wrong with that. In theory, the ATO rate should encompass all vehicle costs in relation to that travel, and that's what the ATO has deemed as a reasonable amount to be reimbursed for that type of travel. But there's nothing to stop you as a business owner from charging more than that to your customer, keeping in mind that you're probably paying that rate straight back to the person that's out on the job. So if you've got a contractor that's running out for you, or one of your boys is heading out on that job, that's the rate you're paying him for his car allowance as well to make that happen. So keeping in mind those margin and markup things that we were talking about earlier, and John also was alluding to, you may actually find that you want to charge a bit more than that to customers to recover not just your rate, but your tradesperson's time for that 5 hours travel as well. Because it's not just about your vehicle costs, but it's also about the labour component that you're losing because they're on the road for that 5 hours. So there's nothing wrong with you charging more than the ATO rate. That's really set as just a base rate for tax deduction purposes, but as a business owner and managing your costs and labour rates, there's no reason why that couldn't be 2, 3, 4 times what the ATO rate is set at.
Okay, great. Thank you, Suzanne. And Jason will get you to take that one back to the member who was questioning.
If I could just add one more thing to what Suzanne said. We have one client now who's in a regional area. I've just on the call to them before here. They live in Orange in central New South Wales. For those types of scenarios, they charge either a half day or a full day rate. So if there's if you want us to come out and service and fix, it's a half day rate or a full day rate. And that's how they do their pricing now versus trying to work out the complexity of how many hours were you driving for and yada, yada, yada. So that's another thing to consider as well.
Another alternative. Yeah, no, that's great.
I've also had some clients that have looked at zone rates. So if they look at where their head office is and where generally the boys are travelling from, they might draw a round circle around the office and say, well, within 50 kilometres of that, the rate we charge is X. But if we have to go beyond that, 100, 150, 200, we've got different rates for depending on how far we're going as well. So there's a couple of approaches and ways that you can look at charging for recovery on that side of things.
Yeah. Okay, great. We also have another question from a member. So Suzanne, you mentioned the rates are different for city and regional. If we're looking to offer services to both regional and city areas, does it make sense to create two different pricing for different areas, or which area do we follow?
Yeah,
so
good
maybe a
question.
member might have a business in Brisbane and they might have a business in Mackay or something, and maybe they're wanting to get some clarity in that.
Yeah, good question. So, look, we've had some clients that have been in that situation and have looked at different pricing for different areas. It can be a little bit tricky if you've got the same people sending or heading out to different regions. But if it's like Penny said, and you've got someone, say, sitting in Brisbane and someone else up in Mackay, you might find that running different rates is the best way to go. You'll find that competitors in both of those markets will be charging different rates. And for you to remain competitive, it makes a lot of sense to have a regional rate for the work that's being done in Mackay versus a rate that's being for what's being done in Brisbane.
Yeah. Okay, great. Thank you. Also, we just recently did a survey out to industry to get some feedback in relation to charge out rates. So we are doing a presentation at our member meeting next Friday on that and giving everyone a bit of an update on it. We also sent it out in our newsletter yesterday on Monday as well. So it just gives a snapshot of the information that we've collected and what people are charging in the regions versus in SEQ as well. So it's good to be able to look at yourself against what others are doing, like what you mentioned before in terms of that, checking out what your competitors are doing.
With those rates, Penny, are you still finding there's quite a difference between the regional and state and city-based areas?
There is a difference, and it's funny because when you talk to members in regional areas, sometimes they're hesitant to put up their prices and say the market won't, the consumers won't pay any more than $70 an hour, for example. And it's about having those conversations about, but it's your business. You've got to look at your costs and your overheads, not just determining what you think people may not pay for your service. And like what John talked about before in terms of that value piece as well, just undervaluing is a big issue, I believe, in our industry.
I agree. And along with what John was saying earlier, I had the same sort of thought. But along with that, I've had clients that have come in and said, I can't charge any more than $70 per hour. And I said, well, why not? What is the limitation stopping you from, oh, people won't pay it? Have you tried? Have you asked around? Have you looked at what others are paying? Because I have clients that are charging 150, 200, 250 an hour. So often it is exactly as John was saying, it's that, what do we value ourselves at? And do we find that it's a limitation in our own mind as opposed to the reality of the market? So,
yeah, totally agree. Does anybody have any other questions they'd like to raise in the chat, or anyone wants to talk on screen as well? We're happy to do that. Everybody's being quiet today. They're not normally like this.
Well, we've just solved all the problems.
They can't wait to get started. They're going to go and recalculate all their different things.
Yeah, I know, right? I know.
Yeah, I've got one for you, Pen.
Yes.
Is there any strategies behind collecting bad debts rather than a heavy hand? You got, like, I know we go through the Cornwalls for a letter of demand, but that usually bounces off with very little success.
Yeah, we find that is a challenge for a lot of businesses, is how do you collect your debts? I think having a good policy around that and sticking to it is a good starting point. So when do you start collecting them? Is it a phone call first? Is it an email? When do you go to letter of demand? And what options have you got post that? Don't be afraid as well to do things like, going to small claims or lodging at sort of court if you get to that point. Debtor finance is another one people can have a look at. So whether you can get some sort of fee funding where a funder will fund the fee back to you so you get paid, and then they're the ones dealing with the payment plan with the client. So there's some options around some of those things that can help before you feel like you've got to go straight to that, get the lawyer involved and send the letter of demand or take firmer legal action. So I think having a strong policy and solid outline about how you want to approach it and being consistent with that makes a big difference. But looking at fee funding or other sort of debt collection options can also help.
Yeah, I find a squeaky wheel seems to work most of the time too.
Most of the time it does.
4 calls a day.
Look, yeah. And I think sometimes people don't intend not to pay. Sometimes it is just a tight spot in cash flow, and that quick phone call will resolve it. And they'll say, look, I've got money coming in next week, I'll get it sorted. And most people are genuine about it, but you will get those tire kickers that just keep pushing it down the road, And you do have to take firmer action in some of those cases, unfortunately.
Yep.
Yeah. John, did you have anything to add to that one?
I think, Kent, what Suzanne said, it's a process, and, taking the emotion out of it, regardless on who it is. If people are really clear right up front when they engage you as a contractor, that this is the game we're playing and this is what will happen if we don't fulfill on our end of the agreement, because that's really what it is. It's then following through with that. And in today's environment, again, depending on who the customer is, the famous last words, they'll be good for it, have left a lot of people high and dry. So have a process, stick to it, take the emotion out of it. And never easy, but it sort of logically allows you to go through it.
And I think have a look at options where you can collect on the spot as well, particularly for some of those domestic plumbers where you're heading out to just a regular consumer house. Have a Square or some sort of PayPal or online system that you can just get their payment straight away via credit or debit card. I know it doesn't stop it if that fails, if their payment's declined, but at least you've got a higher likelihood of recovering if you can do it on the spot than chasing them 30 days later or 60 days down the track.
Yeah, I think terms and conditions go a long way to
absolutely
know exactly what you expect before you start the job. We've got a contract that's work for us now. As soon as you sign the acceptance, you get a 16 or 17 page contract with all his terms on it, and then he wants a 10% deposit on signing the contract and 50% before he starts. So it's very, very clear. If you want to use their services, that's what they want.
And I think don't be afraid to do that. Take a deposit up front.
Yeah,
if it is a larger contract or you're going to be there for a few days, absolutely. Take 20% or 40% up front. At least you're covering the majority of your costs by doing that. And then that final payment is your profit. I mean, you still want to collect absolutely 100%, but at least you've covered your costs up front if you can get that upfront payment.
Yeah, if they struggle with the upfront payment, you sort of understand that they're not going to pay you at all. So if they're going to kick off with a deposit, you're probably going to get paid.
Correct. Yeah.
And just on that, there are rules on the QBCC website which talks about how much deposit you are actually allowed to take per job. So probably something for information as well. I was just trying to pull it up because I can't remember off the top of my head, but just something that people need to be aware of, that there are limitations in that space as well.
Right.
All right. Well, we might wrap up today.
Just a question.
Hang on. Oh, yes, we've got another question.
With that regional compared to Brisbane pricing, when you talk region, where you think of a lot of cities up the east coast, Rocky, Mackay, whatever. Is there any particular reason why they're not similar, the regional prices compared to Brizzy?
I think traditionally a lot of it has been mentality, which comes back a little bit to what John was talking about. People think that just because you're regional, you're going to be cheaper. And so I think that mentality has just carried through generations, and it's a hard mindset to break in a way. And so it just comes back to people expect that regional pricing is going to be different, unfortunately, because I don't know why it should be. In reality, it could be the same across the board, and people wouldn't have these questions coming through or wondering, well, how do I quote if I'm doing Mackay or Rocky, or why should it be different? But unfortunately, I think a lot of it has just come back to what people are accustomed to.
Yeah, because if you look at you look at experience and then you look at kilometres, probably in Brizzy you'd get less bang for your buck in your hour because you're travelling quite a bit more. It's an interesting little subject.
If I could just add something to that, sorry, jump in there. If the cost to run your business in the country are the same as the cost to run your business in the city, I mean, the only other thing that might be varies, it could be a little bit more. But I think about this. If I go to the dentist and I've got a toothache and I need it fixed, okay, I'm not going to quibble about the price if you're Mackay or Rockhampton or Thargomindah about, geez, that's a bit pricier than I'd get in the city. I want that tooth fixed now. So I want that drain unplugged. I want my hot water system fixed. And I'm the same as Suzanne. A lot of it is, while we're in the country, we're not as valuable. That's a complete load of bull,
Yeah.
So know your numbers and price accordingly.
Yes. Cheers.
And I think, on that note, also the materials that we get, we have to order some, and they've got to come from Brisbane, and then they've got to come from, certain places that are, down south. So, we have to kind of figure that in as well, because we've got to wait for the materials to get here, and then it's going to cost more, and it's just,
But just the communication to the customer around the time frames to obviously get the material delivered, and you may have to pay extra because the delivery fees might be higher.
Yeah. Thank you.
No, that's good. Good feedback. All right. Well, thank you to each of you for taking the time to join us today. We really appreciate it. Thank you, of course, to our fantastic presenters, John and Suzanne, for being here with us today. I hope each of you have taken something away from the presentation and something that you can implement in your business, and really doing that review piece that John really talked about as well. I would like to thank Jovi as well for all her assistance with the coordination of this webinar today. And thank you, everyone. Have a great afternoon. We will make this presentation available. We will send it out to all that have registered, so we'll be able to give you a copy if you want to look back through it. All right, wonderful. Thank you. Have a great day. Bye.
Thanks, everyone.
Thanks, guys. Catch you later. Bye.
Thank you.